All right, guys, today is day 3 of the challenge for mastery of part-time swing trading. Yesterday, we talked about analyzing the market, and today we're going to talk about how to effectively use moving averages. There's a lot of different ways that are talked about, how different people use moving averages. I've tested just about every single theory that I've found, and there's really only 3 uses that I have found to be effective for using moving averages. And those of you who follow me on the Trade Report, you know exactly how I'm using them. And the 3 ways are, I use them to identify trend and help me with my trend analysis. Number 2, I use them to assess overbought and oversold conditions. And number 3 is for pullback entries on setups that are related to pullbacks. So I'm going to use Netflix as our example, and I'm going to have an exercise for you guys to do that'll help you use moving averages more effectively. So I'm going to share my screen here. We're going to pull up Netflix, and let me get that screen up here. And what we're going to do in Netflix is it's going to illustrate all 3 of these points. So first of all, let's take a look at how moving averages impact the trend, or not impact the trend, but help you identify the trend. Now, the first thing you can see is I'm using 3 different moving averages. And the reason I didn't talk about time frames in the article is because people are going to be trading on different time frames. Now, the time frames that I'm trading off are basically intermediate and really fast-paced time frames. So to have both of those time frames represented on the chart, you'll see a yellow line here, which is the 9 EMA. That's the exponential. Now, usually we're using simple moving averages. So if you prefer to have them all simple, you can change the 9 exponential to the 5 simple. The reason I use a 9 is a lot of day traders are using this, so I like to have that on my chart so I can see what other people are using. So the 9 is going to be the very fast-paced moving average. It really relates to what's happening right now, maybe over the last 2-3 days, week, 2 weeks. That really gives you a good indication of that trend. The more intermediate term, which is really going to relate more to the types of swing trades you might be taking that you're going to hold for maybe a week to a few weeks, that's going to be related to the 50-day moving average. So a lot of intermediate swing traders are using the 50-day moving average. So obviously we want to use that as well. So we've got the fast pace, the intermediate moving average, and then the longer term trend is the 200-day moving average. That's really gonna, especially if you're position trading, you want to watch that. And even if you're trading on a shorter time frame, you want to know where you are in relation to this, because if you are breaking down below the 200-day, there's a good chance the stock is going to go into a bearish mode. So keep that in mind. So those are the 3 moving averages I'm using for the most part. Now, in terms of identifying the trend, let's take a look at Netflix and let's take a look at the 50-day moving average. And basically, we see 2 of the trends we talked about in the article right here. First of all, if we look at 2018, basically Netflix has been in an uptrend. And without even looking at the price action, we can see that reflected in the moving average. If we see here, going back to January 2015, the moving average went from flat to up. And that's basically as simple as it is in terms of identifying trend. Nothing too complicated. It's just we draw an arrow and that arrow would be pointed up. Whereas in 2017, in much of 2017, it was in a slight uptrend, but especially towards the end of the year, it was more trading range bound. Now we can see that reflected in price action, where basically from October all the way to January, so that's a period of 5 or 6 months, Netflix was trading in this range. And the moving average reflected that by trading in that same range. So you can see here, if we're just taking a look at the moving average, we know we don't want to be trading trend setups during that period because the stock was not trending, and you're going to continually get stopped out and fail with that setup. We would have been trading range-bound setups, and the moving average was a good clue or indicator for that. And then if the stock was ever in a downtrend, the moving average would reflect that. Let's look to give you an example of downtrend on a short-term downtrend, while long-term this still is an uptrend, or an intermediate term. Short-term, Netflix was in a downtrend, say from here, from about 338 down to 274, and the moving average reflected that by going down and then curving up. So you can see how the moving average can help us in terms of assessing the trends. And it's a very simple way to do it. Sometimes price action can be a little choppy and it's hard to tell. You can look at the moving average and that'll give you a good clue. So that's the first use of the moving average. The second is to assess overbought and oversold conditions. Now, if we look at Netflix here, we can see during this period here, it was trading right along the moving average. And then the stock broke out. And initially, it's really close to the moving average. But now look what happens. Pay attention to the space between the moving average and price action. The further this thing gets from the moving average, you know there's going to at some point be a reversion to the mean or a snapback type trade. And we saw that here. Eventually, Netflix did snap back here. Eventually here, Netflix snapped back, and the stock is always going to eventually go back to where the moving average is. So when the stock got really extended, how does that guide my trading? First of all, I know I better be cautious because the stock is getting overbought and there's probably not a lot more room to the upside. But I can also think about the different setups I can trade. Remember when we talked about analyzing the market and we apply different setups to different conditions. And this is a condition here where I know I'm probably not going to trade a continuation setup because we're just so extended that it's probably not going to continue any further. But any reversion to the mean type setups, like here, a quick short would work. And we actually got that trigger when we got this kind of bearish candle formation here. We would have known to enter here and you would have had a nice trade based on your moving average analysis. So overbought, oversold conditions. And finally, it's a great support indicator for pullbacks. Now, in the article I mentioned, my favorite support indicator is actual price action. That's where was buying and selling happening in the stock. So there's obviously a lot of price action in here. You can see where we pulled back into here was right in this big buying area in here. So that is the number one support level. But the second most important is the moving averages because a lot of people are watching them and trading around them. So you can see all of these potential pullback entries here. We had the pullback here, and then there was an entry right in here when we remounted the moving average. And we'll talk more about these setups as we go through the challenge. But just know this is a good indicator to help you with pullback entries. A trade that I am in right now, and Trade Report members were alerted to this, we entered Netflix. Let me get a little closer here. When the stock remounted the 9 EMA right in here at 314, and I'm still in it at 360. So we're up about 45 points right now. But that was based off the moving average remount. So that's an actual trade I put into practice using Netflix and using the remount and support of these moving averages. So these are the three ways I use moving averages. Again, to identify trend, to understand the overbought and oversold conditions in the stock, and also to make the trade, the actual pullback entry for a trade. So now what I want you guys to do, you can do this with as many stocks as you want, but at least do this with the FANG stock. So do this with Netflix, which we just looked at. Do this with Facebook. Do this with Google. And do this with Amazon. I want to take these stocks. I want you to go back 2 or 3 years, and I want you to apply these 3 uses for moving averages related to these stocks. And very quickly, we can already see what's gone on with Amazon here related to these moving averages. So just doing these 4 stocks, really analyzing them, putting into practice the 3 points we talked about, you're going to be a pro at using these moving averages, and we'll be able to apply it when you start making your trades. So do it with these 4 stocks. If you want to do more, you can throw in an Apple, an Nvidia, any stock you want, and just watch how they reacted to the moving averages. The more you do, the better you're going to get, and you're going to have a mastery of actually using these